Okay, welcome to the shipbroking panel at the New York Maritime Forum today. Looking out at the audience, we seem to have about 60% of the audience is shipbrokers, so hopefully there'll be a very informed Q&A at the end. As fitting the day's New York focus, we have three representatives from what I would term American ship brokerages, and a visitor from Greece who will hopefully provide that European perspective on New York shipbroking. Immediately to my left is Christos Papanicolaou. He's the Director of Business Development at Charles R. Weber & Company. Next to him is Bruce Sullivan. He's a Director at Poten and Partners. And filling in for John Smith momentarily is one of his colleagues from McQuilling Partners, Stefanos Kazantzis.
Very good. Very good.
And last but not least, all the way from Greece, we have George Daskalakis. He's the Director of S&P at Allied Shipbroking. You know, and I'm, for those of you that don't know me, I'm Kevin Kilcullen. I'm the CFO of Team Tankers, a international chemical tanker operator that has its headquarters out here in Westport, Connecticut. You know, the composition of ship ownership in New York has changed dramatically in the last decade with the rise of private equity and alternative investment funds owning a lot of the ships that constitute the New York shipping community. My own company, Team Tankers, was originally a chemical tanker operator created by a Norwegian family that is now owned, is publicly traded, but we're really owned by about a handful of hedge funds based here in New York. How has the brokerage community, and in particular the New York brokerage community, adapted to the changing nature of New York ship owners? Christos?
Well, I'm actually came out of and arose out of a ship owning firm actually in Connecticut, originally in New York. And there was a bunch of mom and pop shops all throughout the tri-state area as we were younger. And we were talking about it outside. Prior to that, there was also all your large oil companies in the New York area. As the communications factors grew, everyone dispersed and then consolidated through public transactions. So now we've all become from New York firms to more global firms, and we've all had to adapt in various ways. I'll pass it on. So,
yeah, I think the key word being global. You know, we have strategic office locations in London, Singapore, New York, and we feel that these areas we need to have coverage there locally because we still feel that personal relationships is very important to our business. But at the same time, this is a global market. The New York market, as you pointed out, Kevin, has changed in many ways. But in some ways, it hasn't changed that much because, yeah, maybe we lost some owners over the years, but over the past 10 years, you know, we have people like Navigate, we have Generate, we have yourselves, we have Scorpio. So we still have a large contingency of New York-based owners. So I don't think that's made us change that much. I think really technology and communications has forced a bigger change on Poten over the years.
Stefanos, how has McQuilling adapted to this trend?
Yeah, well, I think it's a good thing. Being in New York and having the visibility into the private equity firms that are located here, the hedge fund managers, allows access to them on a personal level, which goes a long way. I mean, it's a brokerage system to be on the phones, emails, communication is key, but having those face-to-face relationships really goes just a little bit more. So what we try to do is we try to communicate our thoughts, go a little bit above and beyond with our research, provide them insightful discussion about where the markets may be heading, and doing that over a face-to-face dinner or a meeting we think has an advantage being a New York shipbroker.
And George, I now know that you spend a lot of time here. Has your approach, have you had to do anything differently given the changing nature of ship ownership in the New York area?
The structure has changed a lot. I mean, we have seen all these changes in shipping. I think in New York, by calling many years ago, there were more small companies. Now we have the big guys by employing a lot of people. Owners have changed a lot. I mean, you don't have the individual owners anymore. You have the platforms arising from the hedge funds and all the capital markets. So I'm calling them as ship owners nowadays. So there are a lot of changes happened over the last decades. I mean, more brokers now here, less companies, less traditional principles, more hedge funds. if you allow me the expression, ship owners.
And Christos, how do you and I had some dealings at my previous employer. How do you cover these new ship owners? Do you spend most of your time with the management, so people like myself, or do you also solicit the investment professionals that are making the business decisions?
It's a great question, actually. It actually has to go in tandem. So, all the private equity, the guys who are repping them, they all have their investment committees. So if you're not bringing them along the way as you're going, you're never going to get it along. So the management has to go hand in hand. So what we spend a lot of time is, as we're discussing with the management like yourselves, trying to structure various deals. At the same time, we're talking to the private equities and bringing them along to see if they have to alter the route in any way. So that's the difference between where we really have changed, where we were a relationship broker, to Stefanos' point, going out to dinners and entertaining, and now we're spending a lot more time behind closed doors over meetings, over structured analysis. This way, everyone is in a more educated position to go in front of their investment committees and get approvals. You've been through it yourself many times, I know. So that whole factor is twofolded. You can't spend all your time with one party and rely on them solely to go forward to the other side.
Bruce, how does Poten divide up the duties of covering the investment ship ownership professionals?
So, first off, the Poten model has always been to use consulting and research to support our commercial activities. So, in that sense, I would say that it's evolved naturally into the capital markets. For instance, I would say it was about 10 years ago, one of the first private equity and shipping relationships was between Riverstone and Seabulk. And actually that was something that Poten put together. And our strategy has always been to focus on the customer. So if the focus was on Seabulk and Seabulk had a need, and Riverstone would actually come along a little bit for the ride. And then we developed our relationships with the private equity in that sense. But for us, it's always been a focus on the end users, on the ship owners, on the oil companies. And yes, we also cover the capital markets, but we do that in tandem with actually trying to get the deal done. But the focus for us has always been the end users.
Stefanos, the hedge fund crowd, again, for lack of a better term, is a little different than the traditional ship owning crowd. How do you alter your approach? Do you have to do things differently when marketing to this new class of owners?
Well, the first thing you have to do is understand who the hedge fund is and what their desired return levels are, what their risk levels are. They could be yield investors, they could be growth investors, so their appetite could vary from a very wide spectrum. Secondly, what we're seeing a lot now is hedge fund owners, let's just use that term, interested in projects. And projects combine the acquisition of a vessel, whether it's a secondhand or a resale, and then putting it on some kind of an employment contract. Could be a short term, could be a long term, and trying to bridge those two together to maximize the return to the investor really requires, just like Bruce said, it requires the research, the consulting. It requires all aspects. So it's a full service operation. It's not just a transaction. It's a relationship model. You need to have intelligence behind your decisions, and you need to convey them in a very sophisticated manner. So I think that's what we're trying to do as McQuilling, and I think our colleagues here are as well. I think that's where the model is evolving to. It's a relationship. It's a very sophisticated model now. It's no longer, hey, this is a ship for sale, find me a buyer. That doesn't work anymore. It's more than that.
And George, I'm curious, how do you stay on top of this community from Greece? What are the challenges there? Is your approach different than some of the other guys on the panel?
The approach is totally different sometimes. It's a different approach if you're discussing with a traditional Greek ship owner, and it's a totally different approach if you're discussing with the funds. We know that if we're discussing with the funds, we have to be focused on the Excel table with the operation expenses, but on the other hand, the vessels are not run by numbers or graphs. People are running the vessel, people are taking the decisions, so it's totally different when you're discussing with a traditional owner and when you have to present the project to the fund. We are focusing in the funds obviously on the Excel, on the OPEXs and all the stuff, but when you're discussing with the Greek ship owner, it's the man, we know the people, we know his emotions, so it's a totally different approach.
Stefanos, I'm going to bounce back to you for a second because you said something very interesting, that it's important to understand the exact nature. We say hedge funds generally or private equity, but they're actually very different investment strategies amongst
Completely.
different funds. How do you go about identifying what shipping projects fit these various buckets of capital?
Well, we saw some panels earlier today which, can give some insight into different types of opportunities that they're looking for. Some are more structured finance, so they're looking for sale leasebacks, which have a very defined term, very strong counterparty, so you have to understand the risk profile of the employer. If you're looking for more exotic projects, there certainly are some of those around, but that type of investor is not common. We think that there's more of a balance right now in the market where your low double-digit returns is where the market is heading to. Identifying the projects, you work hand in hand with your time charter desk to be able to understand where the market is. There are some what we call publicly available market type of term contracts, and there are some off-market private contracts are available. So, having the expertise, having the intelligence, having the relationships that each one of these brokerage shops do to be able to offer the specific investor what he's looking for is the key. And that's why it's important to, have the brokerage community involved in the discussion, because we do have the insight into what is available and what is not available for that specific investor.
Turning now a little bit to the S&P side of things, but maintaining the focus on New York and New York ship owners, Christos, what segments are New York ship owners, be it the more investment-oriented owners or the operators, what do they seem to be interested in today from an S&P perspective? What segments are people, is there a desire to enter?
If we're talking about the New York sector primarily, I would have to say it's primarily tankers, and that goes from anything from the chemicals all the way up to the VLCCs. We definitely see the New York community being more of a global tanker sector than call it a dry bulk or container sector. If you're talking about where the private equities, then it goes more into what Stefanos was saying with how they're structuring it, where the opportunities lie. But from a community perspective, I'd say New York certainly is still a hub for the tankers, and it always has been because of the origin of all the oil companies who originated here. We were talking about it earlier, whether it be at Hess, Texaco, Mobil, Exxon, they all had their base out of New York. Hence, all the owners kind of gathered here. When the capital markets first opened, they opened first primarily for the tankers. So I would call, New York still being the epicenter for a tanker sector. So most of our clients are definitely focused on that.
And Bruce, do you see a difference between where maybe the more institutional capital is looking to invest versus your operating ship owner or your traditional ship owner today?
For us, primarily, the answer is yes. I think traditionally, from the S&P sector, we were seeing things like, for instance, a VLCC was something that we were primarily focused on in the last, say, 5 years. That sector seems to be changing slightly. Right now we had a situation where we got involved with a deal with Bari. And in doing so, we realized quickly that for them, it was very interesting because as far as the capital markets go, it wasn't as important of a structure to the deal. So it made it very simple, in fact, to do that. So for us, once again, I'd just like to emphasize that the capital markets itself, the structure here in New York, obviously is very important to the ship owners. But for us, we're focused on the commodity users, the people who have the oil, the people actually who have the ships, and we bring the capital markets in when we see a necessarily deal flow in that respect.
Stefanos, New York Capital has been behind some very large new building orders or series in the past 5 years. Mm-hmm. Is that a trend that's going to continue? Is there still interest in new buildings?
I think there's always interest in new buildings. I just don't know how feasible it is at the moment to really go ahead with that transaction from a financial perspective. I think the market has gotten to a point where the order book, especially on the tanker side, has reached a level which is becoming quite stressful on rates. I think 17 is going to be a little bit of a weaker market than 16 is. The level of deletions is something that should be troublesome for owners. We've had one VLCC deleted all year, and that was sold for conversion. You have a serious steel price issue going on in China, where there's a lot of regulations on the futures trading there, where they have to put more money on deposit, so that's lowering the amount of interest in trading rebar. The Indian scrap yards are basically losing money every day. So I think the vessel deletions are going to stay low. So I think order book right now is fine. I think new buildings should stay where they are. I think if you're going to invest in new buildings, maybe you should look in a different market.
George, what do you think, what's the interest in new buildings among Greek owners? I know you spend a lot of your time in the S&P market and have done considerable new building work. Is there more interest, less interest?
Right now, Greek owners are absorbing the pain that they had from overbuilding. There is no interest in new building at all, but we're waiting to see the Chinese delegation visiting the area, how keen they will be to accept new buildings. That means if they are going to lower the price. I do feel that some ship owners will be tempted. Although I think Nick Chako said in the past in this forum that you have to hide your pencils to sign new builds contracts, but I think that I have to add not to borrow a pen to sign a new building contract. So coming back on your question, I think that there is zero interest in new buildings. I mean, right now, all of us, we're negotiating and renegotiating the existing order book, which is still heavy. We have some positive movements. I mean, the scrapping was good earlier this year. Now that spark of the market has stopped. So demolition has slowed down a lot. But on the other hand, the positive thing is that we don't have new building orders. So we believe that the market will recover sooner or later, the dry sector. On the tankers, I think that the volume is still there. I mean, it's a lot of tonnage to be delivered. So it all depends from the Chinese if they are going to lower the new building prices. If you want my feeling, you never asked me that, but I have to add on that. I think that some shipyards, they are going to be very competitive and they will try to attract people's attention.
Christos, I know I still get called at least once or twice a week with shipbrokers with fantastic new building opportunities. Are you spending a lot of time at Weber attempting to put together new building projects?
Unfortunately, yes, to some degree. It depends on the customer's resolve. I mean, as brokers, one of our duties, to Bruce's point earlier, is to serve our customer. So we do have customers who tell us, taking a VLCC, for example, the second hit's below 80, give us a call. So we are monitoring it constantly. We are looking at it, and we are of the resolve that, to my panel's agreement, we all prefer not to have any new builds placed out there, but we can't ignore customers' desire and requests, and nor do we want to be excluded from that facet. So we are always keeping in line with the yards, with the various customers, and seeing what's out there. One point we haven't really brought up is the differential between what financing was available and what financing is available, because it's a large factor, especially in the new builds. You talk about your private equity, your structured financing, and back to someone's point, the time charters that get attached with it. Today's banks are withdrawing more and more from lending in the space. So what we're seeing is the ability to place a new building order takes a much larger amount of equity. The larger amount of equity, the larger the risk the owner or the investor is taking. So we're seeing people who don't have deeper and deeper pockets unwilling to do that, which is a good thing, because the new buildings are now consolidated, whether it be with Generate, who's able to put together large packages. Individual ship owners who are going to order one ship are finding it more and more difficult to go about and structure those deals together. So what we spend a lot of time is not only with the yards, we're spending a lot of times with the banks to see how we can structure deals and our time charters, to our customers' requests.
Bruce, I'll give you the last shot, the last word on new buildings here. How is Poten adapting? Are you seeing interest, and are you still continuing to develop new building projects?
Yeah, I mean, I would have to say that the short answer is no, really. I mean, just because of, I guess, everything we're discussing. I mean, on the one hand, we were talking about the possibility of, if interest rates, if there's a change in interest rates, how will that affect the actual, demand for new buildings? And we've actually had some customers who said, oh, yeah, okay, if interest rates are low, and you try to create interest in that idea of, well, if interest rates spike, affect the price. But I think, the bottom line is the spot market has more of an impact on all the segments than people realize. If we had a stronger spot market right now, I think you might even see a bit more of this interest. But being that, once again, we're way down on the spot market as it exists today, the new building interest is really just completely dried up. And rightly so. I mean, the amount of deliveries we have coming out in 2017, if you couple that with what we've had in 2016, it doesn't take rocket science to realize where we are right now. So I think we're all in agreement on we don't need many new buildings anymore, if any.
Well, that's good to hear from a ship owner's perspective. Yeah. Stefanos, Christos talked a lot about the more difficult bank environment. How do you help your clients approach the new world of ship finance where it's much more difficult, especially for your second and third tier and smaller owners to get bank financing?
Well, at McQuilling, I think we may be doing something a little bit more unique. We formed a joint venture with Jones Trading to be able to access capital markets and the financial side of the world, so giving our clients a bit more flexibility in the type of structures that they can access through the platform that we do have. I think that's worked quite well for us. It's opened up a lot more opportunity, different forms of capital, traditional lenders, mezzanine finance, private equity, family offices, hedge funds. So we definitely have a wide spectrum in which they can approach, and we pride ourselves on being able to offer them those options.
George, a lot of the smaller Greek owners definitely relied upon the Greek bank market, the local bank market. A lot of turmoil in the past decade in that market. How are Greek banks open for business? Are your clients able to find ship financing locally?
For the medium and small size ship owners, banking and raising capital nowadays, it's a very uneasy task. We lost the local banks, and some of the famous European ship financing banks are not there anymore. So it's a big problem for the medium-sized Greek owners to have access to the capital markets. And maybe this is a very open sector in the market where the New York-based shipbrokers can play a big role in that, because we are missing the connection between the medium-sized Greek owners and this lot. There are many with the capital market. So brokers, we are suffering the last years because we are doing direct business, and we cannot afford of doing broker-to-broker business because that's the needs of the market and the principal ones. But here is a small opening, I think, and with a lot of potential, because the Greek owners, they need that connection with the market. I know that they're listed and the companies are well known and well presented, but there's a lot of others which we can present in this market.
The comments, particularly from Bruce, about the joint venture are very interesting, because there seems to be a convergence between shipbrokers and firms that raise capital and provide M&A. Stefanos, sorry. Yeah. That was a McQuilling joint venture. Firms that raise capital and provide M&A advice. Yep. It seems to be more pronounced in London and Oslo, though. And in fact, at Team Tankers, we're using the capital markets arm of a shipbroker to run our share buyback program, for example. That was based on an introduction made by a shipbroker. How do your firms in the New York scene see this convergence, and how, or do you expect to participate, and what might that participation look like, Christos?
To Stefanos' point, they chose to consolidate and liaise themselves and form a joint venture with Jones Trading. What we've done in the past, and we're constantly doing, is we have several different iBankers that we deal with. And we have kind of, let's say, loose agreements to discuss various platforms on an individual basis. You're right on one point. The shipbrokers have been very instrumental in liaising the capital markets arm, whether it's an introduction to an iBanker who could help them, or because they are mostly in New York, they're mostly in our community, we're all talking to them. So when our customer has some requirements, we're able to introduce them, whether it's Jefferies, Seaport Global, UBS, whoever the right fit for them is. If we're spending our right time and our team's spending the adequate time with those people, we're able to make the proper introductions and actually introduce them to the right people that can do the job for them.
So, Bruce, interesting. We hear from McQuilling that they're involved in this joint venture. Christos describes more of a firm-agnostic approach, but trying to cater to partner closely with the experienced professionals at those firms. How is Poten participating in this convergence?
I mean, I would say that we would have a different take. If you look back, say, 2013 and 2014, internally there was some discussions about, okay, how could we cover the capital markets here in New York? And how could we basically get into a brokerage segment of that business? And I think this is where we differ from some of our competitors. We just didn't see, it just didn't fit our strategic needs. For instance, some of our competitors like Clarkson's, they got involved in a big way in the capital markets here in New York, and it looked like the right move in 2013 and 2014. Today, I'm not so sure, that looks like a right fit. So our strategy has always been, once again, like I say, it goes back to one of the first private equity shipping deals was done between Riverstone and Seabulk, was if we focus our energy on the customers who are the end users, meaning the ship owners, the oil companies, we can then bring the financing, either be it through private equity, through bank, we can then bring them in afterwards. And that kind of has been our strategy somewhat since day one. And so that's where we kind of differ as far as getting more connected into the capital markets. We just didn't see that as the right fit for Poten.
Stefanos, curious to hear, what are McQuilling's expectations for this joint venture, and how do you integrate it with, the vast range of shipbroking services that your professionals are focused on every day?
Well, I think that's the important thing. We are shipbrokers. That's our expertise. That's what we do. By aligning ourselves in a joint venture with Jones Trading, who are experts at what they do, it's bringing two experts to the table for the customer. And I think that's the value proposition that we're offering. We're not trying as shipbrokers to tell you what financing you should get. We're telling you that we have the right guys that can help you achieve that financing. That's the power of the joint venture. So our expectations are high. The culture is phenomenal between the two companies, and I think that's the most important thing when entering into any joint venture, is making sure the two companies have the right culture. For us, that's a great situation, and we couldn't be more pleased.
Great. I've been asked to leave about 5 minutes for questions, so I'm going to give one last quick hit to everybody on the panel. What's the best restaurant in New York to take your important ship owner clients to? Christos.
Well, I'm actually, I have a favoritism to Avra, which is one of our local favorites here. It gives you the flair of the Greek community. It also has fantastic seafood.
Bruce.
No doubt, Smith & Wolenski's, and the best part of that is if you have lunch at Smith & Wolenski's, you can then come spend the afternoon up with us at Poten. So highly recommend, we're in the same building, so I highly recommend Smith & Wolenski's.
Because Christos took Avra from me, which I was going to say, I'll just add Del Frisco's to that, just because I think they have the best chops in the business.
George, your favorite restaurant in New York?
Cipriani.
Old-fashioned.
There you go.
Thank you to all our panelists today. Now, if anybody in the question, the hordes of brokers there in the back have anything they would like to ask their colleagues, please raise your hand.
Sorry, so there's no brokers in San Antonio, but 3 of the biggest refiners are there. Banks don't let their guys go out to lunch, or barely can go out to dinner. How do you build relationships? How do you get to know these guys? When you're talking to a private equity shop, they don't care about going out for drinks. It's not like, the shipping industry is blessed. It's the last industry on Wall Street where you can still drink at lunch, but you have nobody to drink with. So how do you build those relationships? How do you get those connections with the investors?
You want to see the holes in our shoes? No, the reality is, Sky Mile, we're on the plane. There's at least, I guarantee you, out of all the four of us up here, there's someone right now from all our firms in an airplane. There's someone in someone's office. You brought up San Antonio. They're one of our biggest hubs. So there's always somebody kind of going in there and you're right about the lunches. There are no more lunches. Lunches are an iced tea and a sandwich or something like that. And the reality is you're spending a lot of times, you're building a day schedule, which is around an 11:30 meeting with private equity 1, 2 o'clock meeting after a quick lunch with a customer here. So, I mean, you're making the rounds. The ability to do, my Father's Day of a martini lunch and some people in this room, Mr. Tusiani in the back there. I mean, how many deals did he do over a martini at a lunch and a steak? We don't do that anymore. To a degree, I wish we did. But you're right. It's a lot of foot traffic time and face-to-face time spent by all of us.
Yeah, I think it's a great question. I think for us, once again, I'll bring it back to, for us, research and consulting has always been a big part of our business. So, yeah, we were definitely involved in the lunch circuit and doing a deal over a cocktail napkin. Being at Poten for almost 28 years, I could say I've witnessed a few of those. But quite honestly, being that our model has been consulting and research supports the commercial activity of the firm, it's kind of made that transition easy. And if I could just make one other point, I mean, and yes, we're all on a plane all the time, but it is a global business now. And I'm happy to say with, for instance, with the office we have in London now, traditionally it was never necessarily a tanker hub for us. But when the co-brokerage business died about 10 years ago, it made it very easy for Poten to then enter that market. So the demise of co-brokerage is a sad thing for every broker in this room. Obviously we took away the opportunity of making 1 1/4 on both sides of the deal. But what it did open up for Poten, and I could say this with all honesty, it allowed us entry into a foreign market. We wouldn't have got involved in London necessarily on the tanker side. Yes, we were established there on the gas side for many years. But on the tanker side, because of our relationships with Gibsons and Galbraiths and all traditional shipbrokers, it would have been nearly impossible to have done that. So that was a good thing. So the demise of the co-brokerage was good for us to enter into a foreign market, and I think it makes it easier, like you said, because you can't do the big lunches anymore, but having strategically located offices has helped us significantly.
Any other takes on that? I think we're probably just about out of time here unless anybody has a very quick question. Doesn't look like it. Thank you to all four of our panelists today. Appreciate your thoughts on the shipbroker community. Thank you, Kevin.